Well, hello 4-year journey members. It's Bob Lucas here on August the 21st. I hope you're well wherever you are in this world. It's been around 10 weeks since the last video, and that was somewhat by design. I just don't have a whole lot new to add to each of these videos. A lot of what has been said, a lot of what you need to be successful in this bull market has already been said. I know sometimes it's comforting to hear it again, but in reality, you just need to go back and watch the videos again and learn from a lot of what was said in those previous videos, but also more importantly, learn from the last 18 months and how certain movements in the market impacted you and how it affected you, and how does that relate to the 4-year journey and the HODL strategy that we've outlined in the past. So today's video, therefore, will probably be on the shorter side. Again, once I get going though, it may end up being longer than I originally had thought. But essentially I'm going to cover where we stand in the 4-year cycle, look at the price action, and compare that to kind of expectations to prior 4-year cycles and the expectation for this 4-year cycle. I'll take a quick look at the model portfolio as that's been requested continuously by many of you. And then something a little different. I've just outlined some simple lessons that I want to share with you based on my experience in the past with bull markets that I feel may or should help if they're taken seriously and implemented. Some of those lessons are concepts, of course, I've shared with you in the past. I don't think there's much, like I said earlier, much more new content I could possibly share. It's going to help, but some simple lessons I feel will help. There were many other questions that members wanted answered, for example, on the technology, on the blockchain, on the mempool, on fees, on the economy, on risk in general, on lengthening cycles, on a number of different points. And I think in the end, what's important here is that we don't really overcomplicate what I think is a pretty simple journey that we're on. Okay, and I'm going to cover that in a little more detail further on, but essentially the journey is simple. We believe, and the evidence shows, that Bitcoin is in a long secular bull market uptrend with extreme amount of volatility. So if we believe that Bitcoin is in this massive secular bull market with a significant amount of upside potential, then we need to simplify the process, simplify how we look at that, and work out and find tools to get us from point A to point B and not be disturbed and distracted by all the volatility, all the negativity, or all the narratives that you'll hear on social media and everywhere else. If you believe in point A to point B in a secular bull market, then that's your goal, and that's what we're trying to capture here. So I'm going to cover in the simple lessons some ideas and concepts that I think are going to help us really simplify this again and put us back on track for riding this next bull market. So let's look at the charts right here. So here's the weekly chart that you should all be pretty familiar with by now. This is something I've shared many times before. Here's the 4-year cycle low back in December of 2018. As you know, we had this, what was an early rally in the 4-year cycle, unlike what we've seen in the past. That took many people by surprise. That overextension early in the cycle had led, therefore, to what was an overextension on the downside within a rising 4-year cycle. And this here, both of these moves, in fact, I think caused a lot of grief for many people, including hodlers alike, because many people had not achieved their ideal allocation early in here, in this area, thinking that the market would roll over, even though right here at around the $4,000 range, $4,200, I released a video back in April of 2019 saying that the new 4-year cycle had begun. What ended up happening was people waited until the $9,000, $10,000, $11,000 range to get their allocation, probably started to lever up even more as it got to 12 and 13, and of course the market just dumped on them. And what resulted therefore was that people were over leveraged at the wrong time and couldn't handle multi-weeks of declines here, and what ended up being in effect another bear market within a 4-year cycle. And that was punishing for many people, but I think in the end it was the type of sentiment busting kind of action that we need in a 4-year cycle to really allow us, therefore, to continue this bull market move higher. If you think about it as it stands right now, Bitcoin is at $11,000 and $12,000. And in the past, whenever Bitcoin was at 10,000, 11,000, it was a bubble, right? Especially back in 2017, when it crossed 10,000, everyone was screaming bubble. Even when it crossed 10,000 here in 2019, people weren't necessarily screaming bubble, but it was a sticker shock price, and people FOMO'd in. This time around, however, you don't see that type of sentiment. And that's great. That's what we need from a contrarian standpoint. That's what we need for the foundation of a new bull market run. The market has therefore priced in a $10,000 plus print in Bitcoin as being normal and acceptable. And that's the kind of foundation that we want to build upon. And I think that's what Bitcoin is showing us right here. The last time I showed you a video, Bitcoin was sitting at around 9,000. I talked about the fact that we still need to see a move above all of these prior 60-day cycle highs at around about the 10,500 area to get us and to give us that confirmation that this downtrend that began here in June of 2019 had indeed ended. I suspected and was pretty confident that it had ended, that this capitulation here with the coronavirus sell-off was the end of that decline. And this decline here was fitting because it really did liquidate so many of the leverage players in this space and a lot of the retail players in this space. And again, that's the type of action we need for the foundation of a new bull market. And since then, I believe we've seen a heavy amount of institutional-like accumulation and smart money accumulation. We see that in a lot of the HODL statistics and addresses holding Bitcoin for longer periods of time. We also see it in flows on exchanges going off exchanges. We also see that in some of the institutional platforms as well, with the amount of assets under management in Bitcoin. So I think everything now is absolutely in place for that next run higher. And if you look at this, and I think when we look back in 6 months or a year's time, we're just going to see one relatively steady uptrend from the capitulation lows. There will be pullbacks, and there will be certainly some significant pullbacks, as we saw in 2015, 16, and 17 during that run, but also as we saw in sort of 2012 and 13 when we had prior bull market runs as well. They're going to come, and how we prepare for those eventual pullbacks and extreme volatility events is really what's going to set us apart from everybody else. Too many people are going to basically puke a lot of their position because they're going to get scared, whereas we're going to probably obviously just be learned to accept that volatility, or even add to positions if that's something we want to do. So overall here, we will see these pullbacks, and maybe we're in the process of seeing one right now. And in prior bull markets, we see 30% retracements often enough. And a 30% retracement really brings us back to this sort of $9,000 area. That's something that needs to be part of your plan here going forward, and as price continues. But what I want to say is that when I widen the lens even further out and look at Bitcoin from almost its inception, right, and look at price from the $1 mark up to where it is now, we can see these 4-year cycles are trending higher, and we see that the secular trend is higher. And again, this is the narrative, and this is the time frame that a hodler is working on. They're working on these 4-year cycle time frames within a larger 16-year uptrend cycle. And when you see short-term volatility and short-term declines, you need to be able to turn that off, turn the emotions off, and come back to this vision here and appreciate that Bitcoin does have extreme volatility events, and that's just part of this asset class, and we need to accept that and embrace it more than anything else. But when you look at this, and you look at it from a structure standpoint, you see the kind of the cups that form, and then the expansion to the next bull market. We have another one that's developing as we had expected. Of course, we had, like I mentioned earlier, we had the surprise move up and the surprise move lower, but in general, the trend is still following a path that was outlined and expected in the past. So you need to believe that this trend is going to continue to have confidence to ride this higher as well. If you have fears that this is not going to continue, and for whatever reason it's going to break this, what is now a 10-year established trend, then you need to therefore probably pull back on some of your allocation, pull back on some of your leverage, and get to the point where you can sleep comfortably in the idea that this trend is going to continue for much higher. All right, so are we still on track though? So this is an image from the video from April of 2019. So it's going back now almost 18 months, around 16 months, where I just, for argument's sake, outlined the trends similar to prior 4-year cycle trends on how this cycle could unfold based on, again, prior cycles. And as you can see here, of course, we don't have that big surge up to 14,000, but we do have the pullbacks. But generally, where we stand today, and here it is, September of 2020, if you can draw a line from, say, August, September, and then draw across, you will find that, hang on. Okay, so drawing across from here, we get to around the $13,000 range. So we're pretty much around the area, give or take $1,000 of where the prior 4-year cycle would have been in a similar position, and where I thought this cycle would be 18 months ago. So right on track as far as I'm concerned, but as you can see, and as I've outlined before, I think getting to that $20,000 range is going to be a process. It's not going to happen overnight. Can we get another surprise event like we had here in 2019? Absolutely. Anything is possible in an asset class with this much volatility. But what I expect is a process of rising up towards that $20,000 range, possibly testing it for a number of weeks, maybe even a number of months, with some pullbacks. As I said before, 30% pullbacks in the bull market are to be expected. And then eventually, what I believe will be sometime in early 2021, early to mid, so around the April or May timeframe, do we eventually get through that $20,000 range and continue higher. So none of that has changed as far as I'm concerned, with the caveat that this is just a guide, right? What I'm more focused on is the timing aspect of this, looking for a peak in this 4-year cycle up in the latter part of 2021, with a decline into the next 4-year cycle low into 2022. So going back here to the monthly chart, this is what I'm concerned. This is what I'm really focused on, is looking at price getting up into this $100,000 range, give or take, right? And again, based on the last bull market and this bull market as well, where a blow-off top occurs, and just how far it goes is really anybody's guess, and you would be a fool trying to guess that. That's something that we will approach and deal with when the time comes. For now, though, it's just a matter of sitting here patiently and waiting and letting it unfold as price begins to capture new ground, pull back and backfill, capture new ground and pull back and backfill, and the process continues in an ebb and flow manner all the way up to the 4-year cycle high. This is what I'm focused on. So again, this is nothing new. This is really just saying to you that nothing has changed as far as I'm concerned in the bullish narrative, the bull market narrative, and the 4-year cycle for potentially future gains. So therefore, looking at the 4-year cycle model portfolio that I have on the website, 4yearjourney.com, looking pretty good here. So the portfolio is up 238,000, has a value of 409,000 from an initial capital outlay of 170,000, up 140%. The positions here, of course, with an initial December buy when price was at 4,000. There was a buy in September of 2019 that is now being reclaimed. That was sitting at a paper loss for a while there. That is now in profit, and that's just an example of how a bull market can, sitting tight can really help. And of course, the March capitulation lows was, I think, a massive opportunity to add back in, and there was some positions added right there. The first target is 28,000, taking 5 Bitcoin off. If we get to that point, that will essentially or mostly cover all the outlay for Bitcoin, for this portfolio, allowing me to therefore sit in a position that is purely in profit. And that helps with the sleeping and the ability to ride what would hopefully be some significant paper profits. It's difficult, let me tell you, it is difficult, no matter how many times you've been through a bull market, to sit in positions that are in significant profit and weather 30% drawdowns. And having a position that is essentially paid for and just makes it so much easier. So that's the reasoning behind that profit target. Just taking some off the table and being happy with the profit and happy to cover the risk, and allowing you therefore to sit pretty comfortably for the ride higher. So I've come to the simple lessons portion of the video I talked about when we started this, and I just want to give you a couple of quick ideas here that I think are going to be very helpful. And the most important concept I want you to understand is that you really are your worst enemy. Your path to success in this process lies with you and you only, and nobody else. Nobody else can help you here besides yourself. And if you go into this thinking it's going to be easy and straightforward, I can tell you it's not. And you probably have a sense that's the case with recent moves in Bitcoin and how you probably responded to those moves. So I just want you to understand you are your own worst enemy in this whole process, because you already know the plan, and we've talked about this plan, and you're in this because you believe Bitcoin is going to reach towards that $100,000 range, possibly further, possibly a lot more than that, and eventually I think far higher than that, and it may even fall short of that in the next 4-year cycle. We don't know, and price really is not so important right now, because when we focus on price, and it means we're focusing on gains, we're focusing on profit, and that tends to lead emotionally into focusing on wealth and getting rich and yachts and Lambos and so on. And when you start thinking like that, you're prone to become too emotional in the process. But if you believe this is true, that we're heading towards another 4-year cycle that will resemble prior 4-year cycles, there's really only 2 risks to achieving, let's call it, financial independence here. And of course, the first one is very simple, is that Bitcoin does not do what we expect, right? And that's a risk. I think a lot of people approach Bitcoin as a slam dunk, that it's just expected and there's just no way that Bitcoin is not going to continue on that 10-year path that it has in the past. I'm going to tell you that that's not something I necessarily 100% believe in. And I just know from investing and trading for many, many years that there is no such thing as a sure thing. It just doesn't exist. It never has been and never will. Now, do I think the odds are high? Yes, I do. I believe the odds are pretty high. In fact, I still, to this day, believe this has the best sort of asymmetrical structure and opportunity out there by far. And even with Bitcoin at the $10,000 to $12,000 price range, I still believe that that opportunity is the best opportunity out there, but it's not a guarantee. And the reason why that's important is because there's risk when that's not a guarantee. There's risk that for whatever reason, this fizzles and it doesn't achieve the type of goals that we're looking at, or it pulls back to, let's call it 3,000, 2,000, or even 1,000 and spends the next 3 or 4 years there. Those are risks that you need to plan for. And that's why I've said from the beginning, you need to have an allocation to this that doesn't jeopardize your family and your future and everything else that comes with that. And you need to be able to allocate enough where it's going to be substantial. It's going to be obviously provide you, or hopefully provide you, with some financial independence. And it's going to really move the needle for you, but it's not going to ruin you as well. The number one rule, as you I'm sure I've heard many times, is risk management first, and it definitely applies in this case as well. There's going to be enough juice in these gains if it does achieve the type of gains that we're looking for, that you should do well, without betting the farm on this as well. So that's the risk number one, and we should know that, and we should be mindful of that. But really, the biggest risk is you making poor choices at the wrong time. That's going to impede on your success here. And by poor choices, we mean not sitting tight and being content in a bull market. Okay, some people believe it, but they don't back it up with their allocation, and they wait for further evidence to the upside, and they wait for confirmation bias from everyone else to jump in and get a position, or they're not emotionally in the right frame of mind. So what ends up happening a lot is people will average up in a bull market, and averaging in an uptrend, can be good, but if we look back at the strategy here and what we're looking for over the next sort of 2 years, and believing in that 10-year secular bull market, if we already know that, and if that's our strategy, then why would you wait for your allocation? And that's kind of the message I had back in December 2018 and April 2019. I've said, get your allocation, get your full allocation early in the bull market, and be content and be happy. As you can see from the model portfolio, up 140% already. It's sitting really pretty, and even with a 30 or 40% pullback from here, it's still going to be up a substantial amount. And that's the luxury you achieve when you get in early and have your allocation, as opposed to averaging in at higher prices, increasing your leverage at a higher price. So what ends up happening is you get a bigger allocation, which is something that may be more difficult for you to hold, but you're increasing your average price. So when you do get 30% pullbacks, you may find yourself in a situation where you were, in a good paper profit situation, but because you leveraged higher, increase your price, and then you get a 30% pullback, all of a sudden you're sitting at a loss, for example, on your position. And that changes your mindset and changes how you approach the market. So just get your allocation already. That's really the message I've been saying for the longest time. Don't let the market get ahead of you and away from you, and impact how you see things. So if you must add, whether it's because you don't have the funds now, or you're doing some type of incremental additional strategy like that, just be mindful not to add on a sizable rally. There's this tendency for people to see the market run away, to rally by 30, 40, and 50% in a short period of time, and to then feel that rally is not going to end. And they do end. They always end in the short time frames. And it's important not to add at the end of those rallies, but be mindful that Bitcoin will provide 20 and 30% retracements often enough in an uptrend, and you want to be ready for those. And so if you do need to add, you're going to add on a sizable pullback, and then you'll find, if the bull market uptrend continues, that very quickly after you buy on a decline, that the market will continue up, and you will have a nice position there at a lower price. So here's another risk here. I mean, I've been trading 25 years. I've seen many bull markets. I made a lot of money on some bull markets and lost it all and gave it back. I made money and lost money on bear markets as well. So I think I've learned a few things about bull markets and bear markets. And I think the number one rule here is that you never lose your position. And too many people fall victim to this. They're in on the plan, they see the long-term potential, but they get cute, and they think they can extract even more gains out of a bull market by getting out at certain times and trying to get back in at a lower price. And let me tell you, a bull market can be unforgiving to people who try and time the shorter time frames within a bull market. If you try and time a pullback, you may find that the market gets away from you, and you will then not want to buy back in because you're going to have a higher price because of that, and the market's going to continue, and it's going to continue, and you're going to be locked out of the market, and eventually it will pull back, and most likely it'll pull back right when you buy, because that's going to be the peak pain point for you. And what will happen then, the market will reverse on you. It will give you that 30% decline, and again, you will be stuck with a higher price point and a bigger position. And again, emotionally, it's going to be something that is going to really scar you in some ways and affect and impact how you hodl through the rest of the strategy. So just very important here. Just again, it's a bull market. The goal here is to buy and hold and really nothing else. And such a simple concept that people just try too hard in many instances and end up really suffering because of it. So the money, therefore, is made in capturing the movement of the entire trend. So from point A to point B, and not so much the movement within. If you want to capture the movement within, then you're essentially trading. Okay, you're not hodling at that point. And unless you really know what you're doing, there's a good chance that you will significantly underperform the bull market from point A to point B. If we look at the 4-year cycle low and the first videos I did at 4,000, and we look at the potential of maybe getting to 80, 120, even further than that, you're looking at a 20x increase over that. Why that's not enough for some people, it is beyond me. And but some people want more, and they get greedy, and they try and extract more, and what ends up happening is they significantly underperform what is really just a simple concept of buying and holding and allowing time to do the work for us. So the enemy, again, is yourself. It's not the market. It's your inability to appreciate time and the patience that it takes to capture a bull market trend. It's not easy. It takes a lot of sitting. It takes a lot of being patient. It doesn't help looking at price every single day or every single hour and so on when you have a hodl strategy. The price that matters is the price at the top of the 4-year cycle, or the price where we hopefully sell at the top of the 4-year cycle. That's the only price that matters in the end. All other price prints up until that point is just noise to somebody that's hodling for that period. And if you listen to that noise too closely, if you listen to the noise of social media and so on, you will second guess your strategy, you will second guess this journey, and you'll end up making a mistake. And that's why, again, it's important that if you're on this journey, that there's just the one rule, is that you are vested in the bull market and you're vested in a hodl strategy that captures the gains from point A to point B. All right, so some people say, well, you know, I just have to do something. It's just too much action. There's just too much excitement. I see people making a lot of money. So there's this need for constant action. That's more of a, that's a gambling kind of feeling that you may have, or it's a greed-based emotion that you have. And let me tell you, unless you know how to harness that emotion, at least, and if you don't know yourself as an individual, it can become dangerous. And dangerous meaning you can end up losing money, or certainly significantly underperforming what is the point A to point B trend that we're looking to capture. So, you know, be mindful of this. And if you have to trade, right, if you just can't stand by and watch, and everyone's getting rich on Twitter and everyone's getting rich on social media, people are writing Link and all these other smaller tokens and blockchains and so on to absolute riches. If you have to do that, just be mindful that it's bollocks, right? Some people will hodl one of these altcoins to far superior gains than Bitcoin. And I'm not going to dispute that for a second. It's definitely possible. And I have shared with you in the past that I do have a hodl position in Ethereum. I think Ethereum will do extremely well over this cycle as well. But 95% of the people, and I'm just throwing out a number there, 95, I know it's very high, they're losing money, okay? They are definitely losing money because they're throwing darts in the bull market. And in the bull market, you end up capturing a lot of winners because the entire flow of the market is generally higher. So they're capturing some really big gains on some pretty big leverage. But what you're not seeing when they boast on social media is that they're getting liquidated a lot too, because they're really just trading with leverage, and they think the answer is simply leverage. Leverage works well if everything goes up, but everything does not go up, and especially many of these altcoins, they go down. When they go down sharply and quickly and with very little liquidity in the market. So what you're not hearing is about the people that ride so many of these big winning positions to absolute ruin and loss. It's very easy to blow an account on one single trade if what you're doing is doubling down and doubling down and doubling down. As your account size grows with some lucky picks in a bull market, you're constantly just one big losing trade away from a liquidation. So just be mindful of that. It's not the grass is not green on the other side, and there is a temptation to think that it is, and that you should be taking a piece of that pie. But let me tell you, the pie that we have here in the 4-year journey is sweet enough and big enough that you should be content and happy with that. I prefer to take something that has a significantly higher probability of being an outcome than something that is not very high. They can have the risk if that's what it takes, but I'm happy with what I have right here. So what's the answer then? So if you just can't resist, and you know that you're going to be tempted and you are going to trade, or you are going to try and leverage some of this, then the answer is very simple. Separate your accounts. I'm obviously a trader. I trade full time as well. But I have separate accounts. For my HODL strategy, I use a multi-sig scenario. I have my treasures in safety deposit box. I have in other locations as well. Obviously, I can't get to my HODL position without effort, without many hours of traveling to get around just to unlock what I have. And it's not because I'm tempted necessarily, because I'm not. I'm disciplined enough to ride this strategy, but I have it separate for security reasons. But because that is a long-term position, I don't need it now. I don't expect to need it anytime soon. So I prefer to focus on security and safety. But I also have trading accounts. I have futures accounts. I have leveraged accounts, and they're separate, and they are focused on different time frames. The decisions I make in those accounts are based on charts I see on a 4-hour chart, or a 12-hour chart, or a daily, or a weekly, whatever the case may be. The decisions are different. I may be short the market for a couple of weeks while I'm sitting here in a HODL position that's long, and that's just the way it is. That's time frames. So if you need to if you need to trade, and if you think you are going to be susceptible to that, set up a separate account. If you don't have the experience, like many of you don't, just set up a small one. Don't risk too much, and play your hand if that's what you need to do, and learn from it. And if you lose, which you probably will, or you will at some point, then learn from it. What did you learn? Why did you lose? What are some of the mistakes you made? And try and make that a lesson for yourself. And if you think you have a talent and you think you can do well, it's not an easy game, but if you think you can, then get some books. There's plenty of trading books out there. Learn how to trade and learn the process and see where that takes you. But the most important message here is, don't marry the two. Don't play with one pot designed to capture the gains on one time frame with what you see in social media, what you see on CoinMarketCap and all these other sites. Don't mix the two. Separate them two and create a totally different mindset for both the short term and the long term. And that's the way you can then guarantee yourself, or at least give yourself a better chance of sticking to the 4-year HODL strategy versus succumbing to all the emotion around trading and what you're seeing online. So I'm going to leave you here. So this was a relatively short video in the end. I'm going to leave you here with just a simple message here. The concept I'm outlining here, I didn't come up with anything new necessarily right here, right? It's a bull market. That's it. It's a bull market. And Bitcoin has promise. It has a lot of promise for so many reasons I've outlined in prior videos. It's not the time to go over them right now. The promise is that we're in the secular bull market that's going to continue to go higher and substantially higher. And you have only one goal right here, and that's to capture the majority of that trend. And you need the discipline and to follow the process to be able to capture that. And that's, again, it's difficult to achieve, and you should use past volatility and past actions of yours as a guide to learn from that and to come out the other end having successful. Again, I'm going to tell you, there's going to be no worse feeling for you if the 4-year cycle unfolds anywhere close to how I hope it will, and you don't capture those gains knowing what you know today. So my friends, thanks for listening. I appreciate you liking the video, sharing the video. If you have any comments, of course, leave them. I'll try and respond to them. Again, focus on risk. This is not financial advice, of course. And I wish you all the very best. Take care.